Yeah, good afternoon, Frida. Let me just, okay, I think the recording is on right now. So good afternoon to you all and happy Sunday. And I hope you guys enjoy your weekend. We are going to be looking at the review of what we have done so far, especially the one given last week, and see how market played out. And then we are also going to look at what to expect in the coming week, although majority of what we agreed on last week are still in play, and as a matter of fact, just about really going in that direction. Some of them have gone in that direction, but there's going to be a new twist going forward. Let me just quickly give you the explanation right now before we start proper. I would like you guys to go to our YouTube channel, club9forex.com, or just search for Club9forex on YouTube and subscribe. And the reason for this is very simple. Going forward, I will not be doing live weekly webinar outlook like this. What I'm going to be doing going forward right now is to do a recording. I'm going to be doing a recording of the market outlook and then post them on YouTube. Now, if you do not follow the channel on YouTube, it means that you are not going to be getting notification each time I put the videos there. So, which is why you want to subscribe for the channel, so that at any time I put the videos, upload the videos for the weekly outlook, you get it immediately. It is being posted, and I'm going to be doing that on Sunday. So I find it very convenient for me to wake up very early in the morning with a fresh brain, and around 7 a.m. I can do the recording and then post it online for people to watch. Now, there are two things to this. The first is that it's going to help to build the channel for that for the community. So as I post it, there are some people that will just go to watch, and they can always be available there at any particular point in time. Then the second is also that you can share the videos once you have finished watching it, and you are going to be using that to also help some other traders out there. There are lots of traders out there that don't even know what I do. Someone was chatting me at one time that how come I'm this very intelligent and most of my analysis are going quite well, and my membership on Telegram is not even up to like 1,000. I mean, it's supposed to be more than 1,000. Well, to be frank, I've not really thought about it. I just concentrate majorly on my own trading, and the marketing part of the channel whatsoever doesn't really occur to me. So it then let me see the reasons why I need to let the people that are there to also do their own part. That's it. We don't just need to just come to a live webinar like this and just watch and be very selfish and just get knowledge without really, extending it out there. So majority of us right there, we come to the webinar outlook, we listen, we get the idea of what to expect during the week, and we just go and then go with our trading. Meanwhile, there are some other traders out there that are looking for opportunities to even be able to watch videos like this. Even if they're going to be using indicators, they want to have a guide or have a knowledge of what to look out for, so that they will know when to follow the indicator and when not to. So if the video is available on YouTube, it will make you to go to the YouTube and watch it, and not just that. You can easily just click on share. It will give you a link which you can post to your Facebook page, and then you don't know whoever is going to be watching it on that your Facebook page that will just be interested and then get to learn. So by that, you're also promoting and helping other traders out there to learn. So you're not going to be doing it daily, so as not to spam your wall, for instance. Just a weekly thing. Just watch it and just say the weekly outlook for the week. Something like that. So it makes it quite easy for the channel to grow, and also for you to also extend the reach out there to people. So if you go to YouTube, I already have, I think I have just around 85 subscribers, and one of the conditions for this is the one. One of the conditions is 85 subscribers. Now, for me to be able to get a custom URL on YouTube, for instance, I need to have a minimum of 100 subscribers. So I'm sure that you guys, by the time you maybe post or after watching the webinar, you can just go there and just make it 100 so that I can get the custom URL in such a way that it will be easy for people to even just click YouTube/Club9Forex and it take them directly to the YouTube channel. So then another tweet, I told you that there's going to be a tweet to how I'm going to be approaching the market going forward. Before we start the review of what has happened so far, I have actually reviewed my trading plan, and this is the trading plan. I started trading around 2015, and this is not what I designed in 2015. My first design of trading plan was very, very disgusting. Let me just say it was too, which is expected anyway. But as on and on and on and on, I kept on reviewing it. In the first instances, I was talking about how to trade with maybe RSI and MACD and moving averages. That's when H cut 13 and RSI is overbought, and told buy or sell and all that. All those ones are bullshit. So that was how I started before. I just started reviewing and reviewing and reviewing until when it becomes something that is quite concrete. Now, it is a trading plan, and it's supposed to be like a roadmap towards that will lead you to where you are going to. So there's always a room for you to, at least once in a while, come back to it and review it based on what your trading style has emerged so far all along. So I'm not going to be discussing the whole of my trading plan here. The students, my students already have an understanding of what it's all about. But what I just want to mention here is where I wrote my strategy. Now, this was the strategy I usually do go through before taking trades all the while before. But then I find it very necessary for me to now review it according to what my trading style has evolved to recently. Now, before I used to carry out a very thorough Elliott wave count and all the way from weekly time frame to the 4 hours or even 15 minutes time frame. But right now, I don't really do much of wave count. By merely looking at the chart, I already have an understanding of the market structure. So what I do basically is to still ensure the wave count is from the weekly time frame to the 4 hour time frame, but getting to the 1 hour or 15 minutes time frame, there is a switch. So which is what I'm going to be revealing to you guys right now. And part of what is written here are what we have been doing all along. So you guys too, you may want to go back to your trading plan. If you don't have a trading plan, there's a necessity for you to have that. It's necessary because it shows that you are actually serious. It shows you know what you are doing. And when you have a trading plan, when people are posting lots of trade setup in a group, they are not going to be getting distracted with what people are posting. Since you have your trading plan, you're only going to go with the one that syncs with your own trading plan. For instance, part of the setup that I said I can be trading is something like this Elliott wave, like this harmonic pattern formation right there. And another one that I can trade is the combination of harmonic pattern with Elliott wave count. So when somebody is posting or channel, so when someone is posting a trade setup in a group, I don't usually follow or look at most of all the trade setup, but let's say perhaps I decide to go and check some of the trade setup. Maybe I was getting confused. By the time I check the trade setup and it's not going in line with what I have planned that I want to be trading, then I will just simply ignore it. You can see that majority of the time, I used to let you guys see the formation of the shoulder pattern, which I usually look out for, mostly on the lower time frame and also the diagonal structure. So those are the things that I have planned that I will be taking, that I've put in my own trading plan, which is going to be helping me to guide to pick the best trade. So going forward right now, I've just reviewed my trading plan, and I'll just read it out to you guys so that by the time we now start doing the major analysis, you'll be able to follow through on how I do the scanning, how I analyze the market. Then not just that, it's also going to expose you to how I used to get the entries on the lower time frame. So the first is we are going to always first analyze the dollar index and the crude oil chart. And the reason for this is because they form the basis at which dollar correlated pairs like the Euro USD, the GBP USD, USD CAD and all that are usually going to be affected. They form those bases. So when you have an understanding of crude oil and also the dollar index, then it will give you a clearer picture by the time you want to go to analyze any currency that is correlated to the USD. And remember that USD is just like the leading currency in the whole world, only followed by yen. And so if you have a good understanding of USD, then it's going to most likely give you an understanding, a thorough understanding of what to be looking out for in all the other currency pairs that you plan to trade. So once we have been able to do that, then we can identify the weakest and the strongest pairs using the currency meter, currency strength meter that I showed you guys, which is this one, the currency strength meter. So right now, what we have on ground right now is that the Swiss franc is the weakest and euro is the strongest. And then oil is also getting to be weak, and also GDP is also like the second strongest. So by the time we are able to combine these four currency pairs together, we'll be able to know which one plans to get strong eventually and which one plans to get weak eventually. For instance, by merely looking at all this right now, I can categorically tell you that after some time, USD is going to be a little weak, then it's going to be the strongest. So it gives you an idea of, just like you doing a fundamental analysis without necessarily going to read news reports. So we analyze the index of the pairs. That means we are going to be looking at the dollar index, the pound index, and all that based on the weakest and the strongest of them all. Then we'll need to identify the structure that we can see on that index. For the time, for the first instance, we are going to be looking at the structure that we can see on all the index, and then we are now going to go to the currency pair that relates to those index and also try to understand the structure. So first, we analyze the index of the pairs by trying to find out the structures that you can see in front of you, and at what level are they going to be completed, and also the fundamental expectation. Now, the fundamental expectation I'm talking about right here has to do with the news report. For instance, if there's going to be a non-farm payroll this week, and you have analyzed the dollar index, and you could see that the dollar index is showing you that there's going to be a strong, this based on the structure that they're looking at in front of you, it's showing that it's going to be strong. And then you want to go to the news report to try to find out if the expectation of the news report goes in line with the structure that you have identified on the index. Then if you have been able to do that, it gives you more confidence to even look forward to what you want to trade by the time you want to trade it. So then you can now go to the 4 hours of the related currency pairs and identify emerging structures and wave analysis. What we have done here is to first analyze the indexes and also try to understand the structures, the completion zones, and the fundamental that is expected for that period. Now you are going to then go to the related currency pairs of those indexes that you have analyzed based on the one that you have identified to either be the strongest or the weakest, and then you start your analysis from that spot, from the 4-hour daily and the 4-hour time frame, and you are going to be sure that you are able to identify the structure. If you are not able to identify the structure, you move to the next one. So the next thing I then used to do basically is that I used to identify key turnaround levels using Fibonacci ratios and harmonic patterns. Now, some of all these things that I'm mentioning here are there in the on the website. If you go to the trading course, you'll see that the trading course actually started in phases. It started from just like Forex beginner course, and you are going to be learning all those things. Sorry, let me quickly just take this. And you are going to be learning all those things section by section. Then after some time, it will now expose you to how to pull everything together. You'll be able to see how to pull everything together to now form the strategy. So right here, you are going to see when you are going to be needing the application of the candlestick formation, and you are also going to see when you are going to be watching out for the chart pattern. Now, mostly the chart pattern is what I used to look out for on the weekly time, on the 15 minutes time frame. You will see the practical application right there. And this is the Fibonacci that I'm telling you right now, and then the Elliott wave and then the market structure. The market structure has to do with less counting and understanding what is in front of you. Then the momentum divergence, which is where you will be looking at the RSI in confirmation of what you can see on the higher time frame. You go back to the lower time frame, and that is when you can consider going with the RSI or the MACD oscillator. Now, the only one that I have not really been using all this while in my trading is volume. And the reason why I'm not using volume is because if you get to understand the essence of divergence, you will know that the rationale behind the divergence is well pronounced in volume. That means when price is actually going against the oscillator, it shows that there's low volume in the market, and there's a possibility that price is going to be returning, reversing at that level. So for me not to have two clustered charts, I decided to just do away with the volume indicator. Then of course pivot points, which is where the levels that I told you. You're going to be using the pivot points in line with the support and resistance of supply and demand zones. You're going to be drawing on your chart, and then the harmonic patterns, which vary, and it also gets to the descriptive pattern features and all that. And then finally, the price action and the pro trading course. It is the price action and the pro trading course that is going to bring everything together that you are learning to say, okay, this is what you need to do first, and this is what you need to do next, which is what has been summarized on this page right here. So you identify key levels using Fibonacci and harmonic patterns, and then you proceed to the 1 hour time frame and do the same thing. So when you have done the analysis on the 4 hour time frame, you then proceed to the 1 hour time frame and also apply the same stuff that you have done on the 4 hour time frame. That means you are going to be looking at Fibonacci ratios at that range, and you are going to try to see if there are some harmonic patterns that conforms with your expectations on the 4 hour time frame. Then finally, once you have understood the market direction and you have been able to understand and bring out the key levels where price will most likely return, the next thing for you to do is to then try to get your entry. And for you to be able to get good risk reward ratio, you need to go to the lower time frame to then study the analysis on that 15-minute time frame, which is supposed to be in line with the expectation of the structure that you can see on the 1 hour time frame and the 4 hour time frame. We are going to see a practical example very soon. And so this is where you now need the knowledge of this continuation pattern, that the continuation and reversal formation chart patterns that are quite explained under this course 3, the chart patterns there. So you can start looking out for the flag formation for the channel. So the first 3, which is the flag, the channel, the triangle, and the pennants, and the 1, 2, 3 are actually majorly for continuation patterns, while the double top or double bottom, triple top or triple bottom, cup and handle, head and shoulder formation, and wedge or diagonal are majorly for reversal formation. But for my own trading, I focus majorly on this. And the reason why I don't usually do this is because sometimes the double top or double bottom or triple top or triple bottom can actually be coming in times of flag or triangle that is supposed to be a continuation pattern. So it is only when you are at the end of the overall move that you see that at this point is where you either have your accumulation or distribution zone. That is when you now start needing, that is when you really need to now look out for possibility of you having a double top or triple top or double bottom or triple bottom. But based on our recent trading experience so far in our own generation, I think the ones that make more sense the most is the shoulder, head, shoulder, and the wedge formation. The reason is because the activities of the market makers make it in such a way that price is going to do as if you want to form a double top, or you want to form a double bottom, or you want to form a triple bottom, only for it to then first break that bottom before it then reverses. So you get to see more of this kind of formation in our present generation than previously. So I usually prefer when price breaks the low, and then we can look for taking the entry from that low instead of trying to take the entry based on the formation of the double or the triple top or bottom formation. So on that 15-minute time frame, that is basically what you're going to be doing. You're going to be drawing your trend lines, and you are going to try to start looking at the expectation of what you can see on the 4-hour time frame. This is the level where you can now start looking at the combination of trend lines with RSI and also the candlestick formations that forms in line with the expectation of this RSI. 1 minute. Let me just, okay, it's closed already. So based on that expectation. Now, we are most of what the analysis we'll be doing today, that's what we are going to be carrying out. But unfortunately, we are not going to be getting a live trade because the market is not opening right now, so we can't even do a live trade. But I'll take you to the history. This our expectation that for last week. Then we'll see at what point the chart patterns on the 15-minute time frame are actually conforming to the market structure that and direction that we have agreed on last week. Now, once you have been able to do that, then you need to check candlestick formation to confirm the reversal formation or the continuation formation on the 4 hours or 1 hour time frame. Now, if you remember on Friday, we had an expectation that dollar index is supposed to reverse at certain level, only for it to then start. So we were able to get to see an inverse shoulder head shoulder pattern on the 1 hour time frame, only for it to then break the. Let's just quickly go there so that we don't stop abstractly. So this was the expectation then, and right here we were getting to see something that looked like an inverse shoulder head shoulder pattern right here, and we said that price is going to go up, only for it to then do this. So immediately it was doing this, somebody was already saying that this push to the upside was just a bluff and that they actually wanted to go down. They only just pushed this to the upside to confuse people. But then if you remember what I said we should try to wait and see how it closes before we then make that conclusion, because the what we can see on the 4 hour time frame is that the level has not broken yet. As a matter of fact, there are 4 candles. There are 4 candles that make up one candle. There are 4 candles of 1 hour that make up one candle on the 4 hour time frame. So it takes long before you can even conclude if the structure has changed or not. 4 hours is quite a long time, if I can tell you, I must confess. But that is what makes trading very boring. It makes it very boring because you need to wait and wait and wait before candle closes for you to be able to confirm that level. So if you look at it right here, what you can see at that time, this was the candle and it was going all the way down to this level, and a whole lot of traders may have started getting into short right here, thinking that it has started going down, only for it to then reverse it and close it bullish. Now the information of this simple candle, let me try to zoom in for you guys so you see it clearly. What I was trying to explain to Ross here was that our expectation is that price is supposed to reject this zone and go up. However, it first did something like a fake out, which is this candle that you can see right here. This candle that you can see right here, it first did something like a fake out and then reverses bullish. Now, the interpretation of this candle right here, this candle that you can see, is quite different from if it has closed in this manner. If it has closed in this manner, then it means that we are heading downwards one more time. But it reverses and closes above that the level of the second shoulder, which means that our expectation is still valid. So it is by Monday morning, which is tomorrow, that is when we now start looking out for the next candle, if that candle is going to be actually confirming this, our what seems to be a fake out. If it's going to come back here again and close below it, then that is when we have it to be that there's a possibility of we going down one more time before price do the proper reversal. So what I'm just trying to explain to Ross right there is that we need to always check out the information of the candlestick on the 1 hour and the 4 hour time frame in confirmation of our expectation of the reversal formation or the continuation formation that we are expecting on that 15 minutes time frame. Now, it is that 15 minutes time frame that you are now going to start looking out for where the invalidation zones are and where you are going to be getting your entries. Now, with the expected price action on the 1 hour and the 4 hour time frame, that is what is going to inform you of where to set your target. We'll look at it soon. And then once you have been able to identify those, you can now use the money management tool to then set your risk and ensure the minimum of risk reward of 1 to 2.5. Now, the ideal one is 1 to 3 weeks reward, but there are some trade setups that may not really get to 3, and it doesn't mean you can't take it. So I've been able to explain to Ross before that the minimum risk reward you should ensure is 2.5 and not 3, but the ideal level is 3 and above. So you want to use the money management, money risk management tool. For instance, if I want to take this trade now on 15 minutes time frame, once I set the money management tool, it's going to adjust my risk. So let me see at what level I'm going to be taking the trade, and at what level am I going to be going out of that trade. So for instance, if I click on this row right now, I can see that my risk reward right there is going to be 2.5. So I can see that if I'm taking this trade, I'm going to be getting a risk reward ratio of 2.5, which is okay. Now, if I want to take more positions and still ensure that same risk reward, you just click on add, and then you can move this one to leave it at the 2.5. Then you can also drag this one to maybe 3 point something. So as you are doing it, you'll be able to see. As you are doing it right there, you'll be able to see that your risk. You'll be able to have an understanding of what your risk reward ratio is, even before you take the trade on that lower time frame that I'm talking about. So let's go back to this our guide. So we use the money management tool to take our risk reward and ensure risk reward ratio of 1 to 1 ratio 2.5. Then all we then need to do after taking our trade is to observe price action and see if price is going in line with what we have anticipated. So, which is where trade management comes in. If you take a trade and you see that price is not going as expected, well, there is a possibility of you closing it if you feel you are wrong. But you don't need to close your trade too early, just like the dollar index that we just explained right now. There's a possibility of you closing your trade in small loss only for price to then reverse it and then start going in direction. So you want to wait for proper confirmation, especially on the 4-hour time frame candlestick, to be sure that price is actually invalidating that zone before you allow it to hit your SL, or you just move your stop loss. If you start moving in your favor, then you want to move your SL to entry. Then if price touch your SL, we then want to wait for a new reversal or continuation formation to be clear, and then we are going to be repeating this process from 9 to 13. That means we are going to go back to check the structures and candlestick on 4 hours and 1 hour time frame and identify a new entry level on our 15 minutes time frame, and then we want to take trades and set our minimum risk reward ratio and all that. Then if everything is going as you expect, then all you just need to do is go and flip. So this is how I carry out my trading most of the time, and I've received chat messages from a lot of traders that usually wonder, how do I get to know at what point price will just get there and start reversing? So it's not that easy, and that's why you see that if you get to see trade signals, that signal provider charging for the services is worth it, because before you go through all these things, and especially waiting for candlestick formation on the 4-hour time frame and identifying key levels and all that, and then just giving it out free. And unfortunately, some people are still out there now just selling it, selling your signal, something they are getting for free. They're also selling it to be making money. It just doesn't make sense, which is why I even stopped the signal service all the while, and I always do trade setup. But people are saying that I should go back to the signal, and if I want to go back to signal, I'm just going to make it strictly for payments. And if I'm going to be posting in the group, it's going to, for free, it's going to be the trade setup. So even if you want to do any other thing at least, you need to be paying for it. So these are some of the things we are going to be carrying out today. And let's quickly go to what we agreed on last week, and then see what price did, and then see what our expectations are for the coming week. Before I proceed, do we have any questions so far? based on what I've explained all along. Yeah, some people usually say that they are not able to watch the video on the academy. Now, you are not going to be able to watch the video right here. These are just like, how will I explain it? They are just like a guide for you to know what and what are covered under each of all the different courses. If you want to watch, you need to actually register. You need to register to become a student, or you want to, if you're already a student, you just want to log in, but you need to log in. You need to go to the dashboard right here before you'll be able to watch those videos. And these ones are free. The first set of videos are free, which are the basics of Forex. So is there any question before we proceed to the review of last week and then our expectation for the coming week? Anybody, any question? Now, also going forward, since there are not going to be a live webinar after like this, if you, after you finish watching the video and you want to, you feel you have questions, you can leave your questions under the comment section of the video, or you can chat me up in the group, that's in the WhatsApp group or the Telegram group. So any questions so far, then we can proceed to our expectations for the week. Any questions? If you have questions, just raise up your hand, then, or you can just type your chat. So what I'm going to do right now is to start with the dollar index. No, don't let me start with the dollar index. We already have an understanding of what wants to play out. What we want to do right now is to look at what we agreed on last week and then try to see what price has played out. Now, last week we said that Euro USD, that we want to sell it, which is why we have colored it red background, and we said we are going to wait for the sell. So let's go to our chart and see what actually played out all along. Now, this is Euro USD, and I'm going to be pressing Ctrl Y on my system and then go to the 1 hour time frame so that we will get to see at what point we were during that last week where we agreed that we should wait and then look for a sell. So this is 1, 2, 3, 4, and 5. So that means that at that point that we have the last training last week, this was where price was, and so we were able to see that we are inside a corrective structure. If you remember, I told you that we are inside a corrective structure. But one thing is not clear. What is not clear right now is that price is not, that dollar index is not showing as if it's going to be strong very soon. And then we want to wait for it to go up a little before we then sell. Now, this is the reversal formation, the inverse shoulder pattern that you are going to be able to see very clearly by the time you go to your lower time frame, that we would have given you this trade to the upside. But I remember that I told you guys that I'm not really interested in the uptrend, that I'm actually looking at the possibility of selling. So what eventually happened is that price went up and we are not going to be in this trade. But if you have followed that, that's my guide, you would have been able to take this trade to the downside, which is when it broke the top a little here and then started giving you a reversal formation. Now, when you see this kind of a thing, it can be quite frustrating, and which is why I explained to you in this place right here, which is what item number. Observe price action for trade money and move SL to break even if it has moved in your favor. So let's say, for instance, that you have taken a sell at this point. You were able to take the sell at the break of this level, and then price started moving in your favor. It means that it will have been in your favor for about 50 pips, about 40-something pips before it reverses. So what I'm saying here is that if this happens and price come all the way here, you need to have moved your stop loss to break even, so that when it's coming back to do this further break of the top, then it's just going to take you out at that your entry. Now, remember what I explained right here is that if that has happened, then all you need to do is to wait for the new reversal formation or continuation formation to be clear before taking the new trade. So you are not just going to be taking that trade immediately. No, you are going to wait for the next trade setup to be completed before the next structure to be completed before taking another trade, which is going to be somewhere around there. And the application of the Fibonacci that I told you guys, which is part of what is explained in the training, is that you would have been able to diagnose this area to be the 113 to 127.2 Fibonacci ratio. Now, this area, by the time we go to the lower time frame, you'll be able to see the candlestick right here. We have about 3 candlesticks right here that gave us a reversal formation. And if we go to the 15-minute time frame, let's go there right there, and you'll be able to see that, as a matter of fact, at the point at which price was actually doing this, if you look at the structure right there, you'll be able to see that this is actually the head, and then it has given you a shoulder head shoulder formation for you to go short. So even if you are not able to take the trade right here, you want to wait for price to come back to this area, to reject this area, and then you want to look out for yourself. And of course, your stop loss is supposed to be somewhere around here, and then your first target is going to be the extension 127.2 to 161.8 extension of the head, which I'm going to be coloring the red. And so it means that you want to take your first TP, which would have hit it around here, and then the second TP would have hit around here. Now, only for price to then start doing this. So what we should expect on Euro USD is very simple. Now, on the dollar index, we added, sorry, let me just pick out this one too. Now, on the dollar index, we added that we expect price to be going upward based on this reversal formation. And when the dollar index was actually doing this down, going to this down, that was when Euro USD was actually making that up move that you can see right there. Where is this? Making this up move that you can see right here. That was when it was making this up move. So immediately the candle on the dollar index then reverses. That's when you start seeing this happening. So what can we expect going forward? Look at the structure. The structure is always there for you to be able to see. And if you are someone that follows my analysis most of the time, you'll be able to know how I do identify the areas at which price can reverse. Now I'm going to be drawing this line, and it means that I'm expecting that there's a possibility that price is going to go all the way to this area before it then drops. And as a matter of fact, it is even very clear that it may most likely be giving us that inverse shoulder and that shoulder head shoulder pattern, just the same way as which we have seen it on that 15-minute time frame around this area. So on the 15-minute time frame, this was the inverse shoulder and the shoulder head shoulder pattern that we saw on the 15-minute time frame. But on the 1 hour time frame, we are having a bigger picture of that shoulder head shoulder pattern. So if you want to take this trade right now, you need to allow price to possibly go for one last swing to the upside, and then we'll be looking out for our trade, our sell from that area. And the Fibonacci level, of course, of that one is going to be the 78.6%. So you want to set your Fibonacci ratio to be about the 78.6%. And when price gets there, it's going to actually alert me right there and just put on your set. So if price gets here, you want to wait for price to do something like this, and then you'll be looking out for yourself around that zone. That means that if you go to the dollar index, you may be expecting this on the dollar index also. You may be expecting something like this on the dollar index. Price actually dancing all the way around here, then going upward. Now, this is how you know whether Euro US is going to sell or not. If price comes here and breaks this level aggressively and keep on coming down, then the structure has changed. That means the inverse shoulder head shoulder pattern that you are expecting has changed. We have 2 inverse shoulder head shoulder patterns right here. This is one, and by the time price keep on doing all this dancing, if you keep on doing all this dancing right here, it can give you the second one of this big inverse shoulder head shoulder pattern right there. So if the major level that price is not supposed to break is this area, if you want to go up. So you need to watch out for price. If it breaks below this level, then it means that the structure has changed, and as a matter of fact, we need to let price actually get to this area and then start giving us a continuation pattern to the downside. But for now, all analysis is expected that price is supposed to reject this area for the up move. Then the GDP USD too. GDP USD, we have something similar in that area. So we are going to look at our expectation on GDP USD and see what has happened over the period. I'm going to press Ctrl Y and I'm going to go to 1 hour time frame, and then we are going to count 5 days backwards. 1, 2, 3, 4, and 5. So that means this was where we were when we had the last webinar. So I'm going to be drawing a line here. 1, 2, 3, 4, 5. I'm going to be drawing a line here so that we know that this was where price was as at the last time we had the webinar. So our expectation for GDP USD last week was that we want to buy it, which is this, that we want to buy GDP USD, and that was exactly what happened. I gave you guys a signal, immediately it manifested because I was able to see this, that price made this impulse, then is making a three-wave correction, then after that it wants to keep on going upwards. So I was able to give the signal around here. So the target level was supposed to be the length of this low to this high, extrapolated upwards right here. Right here. Let me just clean out this one. So what it means is this. There are two levels when you have a flag breakout like this, and two levels you need to watch out for, which is 127.2 and 161.8. And the first level at which price will have gotten to right there is going to be the 127.2, which is this area that you can see, the 127.2 right there. But the next area that you can get to, for it to form the perfect geometry of the first handle of the flag, is the 161.8. So we want to allow price to get to this area first, then we are going to be looking for our proper sell. So as at the time that price is actually going to, and the dollar index is actually going to be dancing down around the second shoulder before it blasts up, we are going to be possibly expecting price to also dance around here before it then comes down. That means we are expecting a break of this stuff and then selling it off. Now, what has given me this this assurance of that level is the structure that we can see on the higher time frame. You know, I've told you that you need to watch, you need to try to identify the structure that you can see on the higher time frame, and then look for how to trade it on the lower time frame. So on the higher time frame, the 4 hour time frame, you'll be able to see that price have actually not completed the structure yet. The reason why I first went for the sell around here during the week was because of the two variations that have to do with the sharp pattern. The first variation is that it traces around the 88.6%, which is exactly where you see that price actually started selling from. So anything that makes price not to really go down from that spot and break this level below, it means that there's a possibility that it's going to go for the second variation, which is at this 113.1%, which is where this PRZ that I've drawn is. So we want to wait. You don't want to take this trade because you don't know if by the time market opens on Monday, price is just going to keep on going down and respect this 88.6, or it's going to go up and respect. So you don't want to look for the buy set of no. They are supposed to wait at the pro trader that you are or that you're going to be. There are a lot of mixtures of people in this trade right now. You are supposed to know when to wait because of the structure that you are looking in front of you. So for this formation, we are looking at the shark pattern formation, and which is the second variation, which is supposed to end around the 113%. And remember that when we took this flagpole right here, we were able to identify that the second level at which price can get to and reverse is the 161.8%. So I'm going to set that to 161.8, and you'll see that it's going to confluence exactly around the level at which we have the PRZ box, where price may most likely be traced from. So when market opens, don't jump in yet. You want to wait for price to dance around, they want to be looking out for the possibility of you selling it around that spot. So we were able to get it right too on GBP USD. We got this movement to the upside, and that one is most likely going to have given you something around about 130 pips or so. Then, so let me go back here to our guide, right here, and it means that we were able to get this right. So the one that we are able to get right, maybe I will just be printing them what GBP USD 2, we're able to get it right. And then our expectation, what I'm going to do right now is that I'm going to be opening a new page, and I'm going to put this as the expectation for the coming week. I'm going to remove all this color. Sorry, 1 minute. I'm going to remove all the color, and I'm going to also make this automatic. So for Euro USD, we actually want to, hold on 1 minute again. So we are going to say this one is outlook for, what is this week? What's today's date? Anybody? I think I forgot. Today should be 12, I think. Yeah, today is 12. Weekly outlook for 12 to 17 July 2020. Let me just put it. Make it bold. Okay. So for Euro USD, we want to sell it, but for the sell, we also want to wait for the sell. We are going to be waiting for that sell. So we want to wait for that sell. GBP USD is a sell too. It's a sell, but we want to wait for the sell. Now the Euro JPY and GBP JPY. Let us look at what we agreed on last week. This is what we agreed on. We said Euro JPY, wait for the sell that we want to sell it. Let's go to our chart and see what happened on Euro JPY. So that's actually massive. I'm going to press Ctrl Y right now, and then 1, 2, 3, 4, 5. So which means that as at the time, let me just do this. 1, 2, 3, 4, and then 5. This means that as at the time we were, as at that time last week, we were somewhere around here. So I can clear this and then take out this, and it means that our wait is because we expect that price is going to go up one more time. Then after going up that one more time, we should then look out for the sell, and that was exactly what happened. So let's see if we are going to have been able to spot the reversal formation on the lower time frame, which is this one right here, and as a matter of fact, the entire level right here. So we are going to go to the 15-minute time frame, and then we are going to see at what point are we supposed to have taken that trade. I hope you guys are learning with all this, and I hope you guys are not just going to just keep it to yourself, and you also need to help other traders out there. Okay, so this is where price actually got to and rejected from. So how are you going to have traded this, and what are you supposed to have done if you were in this trade? Now, the first thing first is that if you are expecting that price is going to be going up before then coming down, you need the application of your Fibonacci retracement tool for extension. And we got it at the 127.2 around that spot. And we're going to be drawing the second one also and setting it at the 161.8, and then we can make that brown. So I'm going to set this so that you see exactly where price goes to and reverse. This one is 161.8 and this one is 127.2 right there, which is this area. So if you get to see this, it means that you would have entered this trade around that spot, only for price to then reverse it back against you. So what you are supposed to do is that if you get to the trade around here and price has moved about 40 something to 50 pips, you want to move your stop loss to entry and then watch out for what actually happened. What eventually happened was that price was actually moving in a corrective structure, which is what you can see right here. Hold on 1 minute. This one and then this one. So price was moving in this corrective structure. Instead of it to go with massive impulse to the downside, that did not happen. It actually got here and started moving in this corrective structure manner. All you just need to do is to wait for price to finish the hole, and then you can consider the entire structure at once, all of the same time at once. So what eventually happened in this particular case was that price came for the double top formation. Price only came back to retest that double top formation and then started going down. So at what level are you going to be taking that trade next? All you need to do is to focus on this area, and you'll be able to see that as a matter of fact, it gave you another shoulder pattern right here. And the break of this neckline, this red neckline right here, is going to be confirming your trade setup, which is what happened at this particular point in time. And your stop loss is supposed to be some distance above the head. And we're able to take that trade too during the week. And as a matter of fact, price actually gave something around about 120 or 130 pips before it then reversed. Now for this reversal, it actually got to me because I was expecting price to get to certain level, and it missed my TP by a very small amount. My TP was somewhere around here. Based on this cluster, I put my TP right here based on this cluster that you can see. So I was like, okay, price is going to get here. Only for it to just get here and reverse it. I have to just close it, my trade on that Friday, with the expectation that I'm going to be able to get into the trade later on. But what happened is that I was not able to see the harmonic formation that we have right here. The harmonic formation that we have right here is the alternate bar pattern. Since price didn't get to the 61.8 and retraces around the 30.2 to 50%, and then goes to the 113% and reverses. There was an harmonic pattern that came out during the week, but I wasn't expecting that price going to be respecting it. I just feel it's just going to be invalidated, so to say. So how are we going to get into this trade right now? We go back to the 4 hour time frame and we can see what price has done. The structure right here on the 4 hour time frame is that price is breaking this corrective structure. So price has moved impulse, then it made a correction like this, and is supposed to keep on going down. So the length of this that we can see right here is supposed to keep it go down. So based on the structure that we can see right here, we can expect that price is only doing a KYM based on the harmonic pattern that I just showed you. It respected the harmonic pattern and is most likely just going to come to somewhere around here, then keep on going down. So with that expectation, we can go to the 1 hour time frame and the 15 minute time frame and look at exactly where we are going to be taking that trade. So I'm going to take my Fibonacci from the high to the low, and I'm going to be setting the 61.8 to the 78.6 Fibonacci ratio, which is going to allow me tomorrow when price gets there, and which means I'm expecting price to get around this area. So when price gets to this area, this is the maximum it's supposed to get to if you want to sell. And this is the ideal area where it's supposed to actually start selling from. This area is the ideal area. So it means that price is only coming for a retest of the previous broken level. Then after that, it can then keep on going downward from that spot. So with this, then I can also start expecting that my Fibonacci is going to be giving me my RSI, is going to be giving me a confirmation of my trade setup. As a matter of fact, this is the reason why I have the RSI plotted here. If you look at how you would have taken the sell around here, you see that if you draw a line around here on the Fibonacci, on the RSI, you will see that the RSI broke below the 50% at exactly the same area where you are getting the confirmation of your inverse shoulder and the shoulder pattern formation at that point. This area, exactly this area. So the second shoulder was actually in confirmation with the break. Price was going upward, but the RSI was actually rejecting and going downwards exactly around this area, giving you the confirmation that you should go short. So if you don't know how to use all these trading tools, you're going to be using them wrongly. A whole lot of traders will be looking for sell around here because it has shown sell, and then buy around there because it has shown buy, only for it to just go and then keep on going against them. But that's not how to use the trading tool. So we got this one too, right? We got the Euro JPY too, right? We got it right there. And then for our outlook for this week, we want to do the same thing. We want to sell it, but we are going to wait for the sell. We are going to be waiting for that sell. That means we expect the price to go up before it then comes down. Then GBP JPY, because they usually go hand in hand. Let's go back to GBP JPY right here. And then I'm going to be pressing Ctrl Y on my chart, and then we can see where we were last week: 1, 2, 3, 4, and 5. And it means that this was the structure that I saw that I gave you guys this buy signal. And then later on, I was also telling you that price is going to keep on reversing from that support. So 1, 2, 3, 4, 5. Then I'll draw this line right here, and then I can clear this drawing. So this was where we were last week, and immediately price finished this correction pattern, I gave you guys the signal to go long, because I could see that we had impulse and then price make a three-wave correction, 1, 2, 3, and then it's giving us a reversal formation for the up move. Now at this particular point, if you go to the lower time frame right here, you'll be able to see that there's going to be a reversal formation around that spot. So I'm going to diagnose this area, and then we can go to the 15 or even the 5 minutes time frame to see the reversal formation there. Where is this guy? Okay, yeah. So you will see that we have our confirmation that we are supposed to go long around this area. So market just don't move by chance. It has it gives you signals at which you are supposed to pay attention to it and know when to enter the trade or not. So if you want to take this trade right there, remember that we've been able to identify the overall structure on the higher time frame, only for us to then come to the lower time frame to look for our entry. And this is going to be the area where you're going to be putting your stop loss, and then the break of this rectangle that I've drawn right here, which is this candle, is going to be giving you the confirmation that price is going upwards. And as a matter of fact, we have this another confirmation here of the inverse shoulder pattern that took us to the upside. And then this area right here represents the accumulation zone where price is not supposed to go down furthermore before we get our new entry. And if you focus on the overall trade setup right here too, on this lower time frame, you'll be able to see that there's another trade setup that will have also given you your entry. That means if you take your Fibonacci from this low to this high, you'll be able to see 127.2 to 121.8 right there, where the ending diagonal formation actually ended, and price rejected that zone and started moving to the upside. So we also got the GDP JPY trade, right? It gives us something around 120 or 130 pips. Then after that, we look out for the short. For the short formation, it's the same thing. I use Fibonacci a lot, and you can see that almost every time I actually use it. So right here, if you go to the 15-minute time frame, you'll be able to see that there's a confirmation where you would have been able to go long. Now for this one right here, it's going to be the ending diagonal structure on the 15-minute time frame. As you can see, price was moving upwards right here. Price was moving upwards, but your RSI at that point is going to be giving you a confirmation that price is going to be reversing any moment from now. You can see that the RSI was actually moving downwards right here. Look at how it was sloping downwards when price was actually moving upwards. That is how you're going to be using the RSI to confirm your trade. And as a matter of fact, if you draw a line around here, you'll be able to get to see at what particular point in time you are going to be taking that sell to the downside. And we got that trade too, but only for price to reverse. Somebody was telling me in the group then that is going to get reverse up to this area. But the reason why I decided to ignore it was because of the structure that we can see on the higher time frame right here on the 4-hour time frame, which is that price has moved in this way and in this way, and it's supposed to come down here and then start reversing for the more down move. But the reason why this happened, why pricing gets here, was because this trade setup, this sell actually started on a Friday. And being on Friday, there are a lot of traders that doesn't leave their trade to overlap more than to overlap into the weekend. So the reason why you see that this eventually started pulling up was because of take profit activities that started happening quite early in the market. So a lot of traders that took the short entry around here, and price moved in their favor. Being Friday, they just started closing their profit, and so the movement to the upside is actually like a take profit pullback. It's not as if there's actually buyers here. If there are buyers right here, the way at which price is going to be moving aggressively is going to be more than what you have around that zone. So what do we expect going forward? Now there's a possibility that we can regard this area, the entire this area as the neckline. This being just being a fake out, and price by the time you market open on Monday, when you are still sleeping, it may have actually done this. So this is the maximum level price should get to if you want to sell. If it goes more than this and start going in this manner and dancing, then you should expect that price wants to keep on going to the upside. So but I don't see that possibility. The reason why I don't see that possibility is that the yen index is actually showing us a sell structure. Let's go to the yen index right here. This is the yen index, and I also gave you guys this analysis in the group. So we had a sell structure here too on the yen index right here, and there's a possibility that price is actually going to keep on going down. And what happened here is quite is in two phases. Now, if we are going to be having more corrective structure, then it means that there's a possibility that yen is going to be weak soon. It means that if price does not do this and go down and break it, that means giving us stopping around this level to go down, then we are going to actually be having a weak yen. That means price is going to be giving us a three-wave correction up to this area before it then starts going down. But I don't expect to see this because the structure that we can see on Euro JPY and GBP JPY shows us that we are getting set to go down. And this is the 4-hour time frame on the yen index. So on the Euro yen and GBP yen that we just look at, we can see that we are getting ready to go down. In Euro JPY too, we are getting ready to go down. So most likely what we may most likely get to see as the yen index right here is a possibility of price dancing around here for us to break below and keep on going down. But by the time market opens, we'll see on the 1-hour time frame. Let's go to the 1-hour time frame. By the time market opens on the tomorrow, we'll get to see if it plans to go up, in which case yen is supposed to then be weak, or if it plans to go down, in which case we may most likely be having a correction pattern for us to short it. So for the yen PS2, for the GBP JPY2, we were able to get it right. And then our expectation for this coming week is that we want to sell GBP JPY, but we are going to be waiting for that sell. There's a short movement to the upside first. wait for the sell. Wait for the sell, second shoulder formation. So this is what we'll be expecting on GDP, JPY. So the next one we want to look at is the US dollar card. And our expectation for US dollar card was that we want to sell it. But I don't think that was what happened. Let's go to check US dollar card right here. And I'm going to press Ctrl Y and then go to 1 hour time frame and count 1, 2, 3, 4, and 5. So it means this was where we were when we had the last webinar right here. So let's look at how price played out back to the 4 hour time frame. And this was what was drawn back then. If you remember, this was what was drawn back then. And so I was expecting that price is going to come all the way down here for a sell before we can possibly have this movement to the upside. But that was not what happened. Price was actually giving us, broke out of this. And as a matter of fact, it has just been in one place, so to say. It didn't really move up, it didn't really move down. If you go to the 1 hour time frame, you'll see that if you have taken a buy around here, price may have gone and then take it out. If you have taken another buy around here, price may have gone up and then it's coming down. So it didn't really give us a perfect picture. And the reason why this happened, or the reason why you had this sharp movement to the upside later on, was because of what happened in the crude oil chart. This is the crude oil chart, and you remember I was giving you an update right there that if we break below this level, then you expect that USD dollar card is going to be going up, and that was exactly what happened. Then after that, I told you that we can expect that we are going to be having a reversal up to this level before price eventually comes down to test this low. And the push to the upside, this push to the upside right here was what made this flush to the downside was what made the US dollar card to go up, and then this push to the upside was what made US dollar card to go down. So let's go to back to the US dollar card, to the US dollar card right here, and you'll be able to see clearly on the 1 hour time frame that when the crude oil chart was actually flushing down, we had this move to the upside. And then when the crude oil chart was actually going upwards, then we are having it, price was just, so to say, just ranging. It wasn't really moving downwards. But my expectation for US dollar card going forward is that if we plan that the crude oil chart is going to reject this area and come down, then it means that the crude oil price is going to be weak, and then we can expect US dollar cards to go up. So we'll be looking out for a bullish continuation pattern on the US dollar card, something like this. If you give us something like this, then we want to take it, probably giving us the overall 3-wave correction that we have been expecting so far before we are going to be having that final drop. So for US dollar card, I'm going to be expecting where is this? I'm going to be expecting a bullish trend. There's no need to be waiting that much. I think it's going to be happening ASAP. Then the score of this US dollar card was more like neutral. It didn't really go up, it didn't really go down. So I don't even know how to color the neutral. Maybe I just color it. How can I give it? I don't even know. Any suggestion? Maybe I just color it blue. Let me just leave it as blue. Then Euro card. No, Euro AUD and GDP AUD. I said sell, then buy later. let's go to what happened during the week. Let's go to what happened during the week. US Euro AUD. We'll be looking at Euro AUD and also GDP AUD. Euro AUD right here. So I'm going to be pressing Ctrl Y, and then I'm going to count 5. 1, 2, 3, 4, 5. So this was where we were last week, and then I can clear this. So our expectation for this, what I said for Euro is Euro AUD. We want to sell it, then buy later. So I think the sell didn't come into play, and I didn't even give this out for you guys. And the reason for my sell then was because I was expecting that price is going to be getting to the 161.8 based on the okay, I can now see it clearly. Let me let you guys see what I'm talking about right here. Now you can see the break. Listen, I've started madness. Let me take it down. Now you can see that there's a break. There's a break around here, which confirms the possibility of we having the second variation of sharp pattern that is supposed to retrace around the 113.1%, and I think that was exactly what happened. But the price just kept on going on and on in a diagonal manner, in an horizontal manner before then respecting it. This is the 113%. And price got there and then started dancing and dancing. So for this kind of formation, I will have ignored it based on based on the explanation I do give you guys on trading with harmonic patterns. If you take a trade based on harmonic pattern and then price, instead of giving you a proper reversal formation, it started dancing around the PRZ, then you just want to ignore that setup altogether. So what happened so far is this: price did as if it's going to be respecting the sharp pattern right here. Did as if it's going to be respecting the sharp pattern, but it just started moving sideways. So our expectation going forward, I think what I'm going to be expecting right now is to simply just ignore this pair. The way it's moving, I don't think I even want to look at it at all. But let's quickly just draw this, and then we want to draw this. So the way I used to trade the Euro AUD is the expectation I have on the Australian. Okay, I now understand why this happened. Now remember that for the Australian US dollar right here, we were expecting the Australian US dollar to sell off. If you remember our analysis on AUD USD, that we're expecting this sell off based on this harmonic pattern, based on the harmonic pattern right here. So instead of it selling off, it just started, dancing. And the reason for this is more because the dollar index is not strong yet. The dollar index has most likely just been relatively dancing within that reversal formation pattern. So it is when the dollar index is strong that it can drag the Australian US dollar down to this level. And then you can now expect that the old Australian dollar is weak. If the Australian dollar is weak, then it means that the euro is then going to be strong. So what eventually happened during the week was that euro was weak. If you follow through what happened during the week, euro was weak, and also Australian dollar too was weak. So you have two currency pairs that are relatively weak together, which is why we get to see that Euro AUD was not really moving, so to say. So just dancing all around, because the pairs that are related to each other for it are both weak. That's exactly what happened. So what I can expect going forward is this. Now it's becoming clearer. What I can expect going forward is this. I'm going to be drawing this, and I'm going to be drawing this. So you expect price as at the time that Australian dollar has not started selling yet, that means all is still a little weak. You expect price to just dance around here and come down to this area. That means all is still strong compared to USD. USD is not yet stronger at that time. So it can give you this formation right here. That means price getting to this area. So if price gets to this area and then start giving you a reversal formation, then you want to take that trade. So for me, it's not the best trade setup, but if you want to trade it, you want to wait for price to get to this area before we sell it and before we buy it. So we are saying wait for the buy after the sell. So let's go here and then Euro AUD, then buy later. So we are still waiting for this buy later that I told you guys, but we are going to first be selling it. I'm not going to be selling it anyway. I'm just going to be looking for the buy. So Euro AUD, sell, then buy later. But for this buy later, I'll say not clean. Not clean enough. The one that moved quite well is the GDP AUD. I gave you guys that trade setup last week, GDP AUD. It moved quite more than Euro AUD. So let me just stay on this 1 hour and then press Ctrl Y. And 1, 2, 3, 4, 5. And this was where we were. This was where we were last week. So I'm going to put the line here, then I can clear this. Okay, so our trade setup for GDP AUD back then was that sell it, then buy later, which was what eventually happened right here. Sell it, which is this, then buy later, which is this. And I gave you guys the trade setup quite late on that, was it on Tuesday or Wednesday? I gave you guys the buy setup around here. It only yielded this so far. So let's look at what we saw last week on the 4-hour time frame and use it to have an understanding of where we are right now. So you remember that I told you that we were getting a diagonal structure. That we're getting a diagonal structure right here, not this. This one, and then this one. So as price was moving downwards, you can see that your RSI was actually moving upwards. And as a matter of fact, how would you have been able to use the RSI to get your entry? It's very simple. All you just need to do is to draw your line around here, right here. So you'll be able to see that the RSI was climbing above the 50%, exactly around the point where you are having price breaking out from that correction pattern right here. So it gives us the trade setup for us to go long. If you go to the 15-minute time frame, you'll see the structure right there, which is this one. You see the structure right there, that we add something similar to the diagonal structure, and the price is, as a matter of fact, gave us something that looks like a triple bottom formation, and then it reverses. If you plot in your line too on the RSI, you'll be able to see that price was actually breaking out from this top right here. It was breaking out from this top, as at the time you are having it breaking out around this area, giving you a confirmation of that long setup that took all the way to this area. So if you were able to follow it through, you are supposed to be making something around over 200 pips or so to say. Let's go to the 1 hour time frame, and we give you somewhere around 260 pips. Well, let's just say something roughly around 200 pips. So where are we right now, and what are our expectations? Let's go to the 4 hours and try to understand the trade setup there. Now, for the 4 hour time frame, I can only say that it seems as if we are breaking a major neckline around here. We broke a major neckline, and price is yet to really get to where you want to get to. As a matter of fact, it's supposed to get to this area. So you can expect another further up move to about 250 pips. So how are we going to be getting into this trade? So what it means that we want to buy the GDP AUD. But we are not going to be buying the GDP AUD unless Australia starts getting weak. So right now, Australia is not yet strong, it's not yet weak, so we can expect some kind of consolidation in this area. If we get this kind of consolidation in this area, then we want to look for that buy setup around this spot. So we are going to be buying the GDP AUD, and we are going to be looking for a flag setup. GDP AUD, we want to buy it. Okay, this is not the outflow. GDP AUD, we want to buy it, and then we want to wait for the completion of flag setup. Okay, so our pass score for this one also is that we got it right. So then for Euro AUD, it has not really moved, so I'm just going to be posting this one as neutral. I think I use blue for neutral. But right now we want to look for a buy on Euro AUD. We want to look for a buy, but we are not going to be buying it immediately. We want to first let it sell, but we are not going to be selling it immediately. Let it sell, then we now look for that buy. So as at the time that the GDP AUD is actually forming this flag setup, most likely Euro AUD will first go down, then we can now look for the buy setup from that spot. Euro card. For Euro card, I think the setup on Euro card also was not clear. The setup on Euro card was not clear, and our expectation for Euro card last week was to sell. Let's see what happens. Euro card, and I'm going to press Ctrl Y right here and look at 1, 2, 3, 4, 5, and then it means that this was where we were last week. So for this one, we got it wrong. Euro card actually went up right here. Euro card actually went up. So what I was expecting for the Euro card last week was because of this structure. I was expecting price to come all the way down to this area before it then goes up. But if you remember that during the week, Euro was weak, but the crude oil chart actually flushed down. Immediately the crude oil chart flushed down. That was what brought about this movement to the upside. And then you started having this consolidation before the break. So what seems to be happening right now is that there's a possibility that price is going to get all the way to some area at the top even before they want to plan going down. So we want to go to the 4-hour time frame and try to understand the price action there, and then we can use it to have an understanding of what to expect going forward. So the price action here, even on the 4-hour time frame, is not clear, but it looks as if we may most likely be having price is rejecting around the 61.8. Let me let you guys see that. It's rejecting around the 61.8. So it's rejecting around the 61.8. So there's a possibility of we having a crab formation. Hold on 1 minute. The crab pattern, and the formation for that one is the 61.8 retracement level, and then the 161.8 extension level. So 127.2 to 161.8, sorry. So I'm going to be setting this to the 127 to 161.8, and then we can go to the daily time frame and try to see if price is actually supposed to get there. If we want to get there, then this is what we may be having, something that will look like this right here. So it looks as if there's a possibility that price is going to be getting all the way to at least this 127.2 region right here. So what we want to look out for is a buy setup on Euro CAD right here. We want to look out for a buy setup for the possibility of we getting something roughly around 120 pips. So let's go and update our guide. Euro CAD, we want to buy it. We want to buy it. I don't think there's any much time to wait on the Euro CAD apart from looking for our buy setup anytime from now. So what we may plan to do, what we may plan to see is price getting all the way to this area, then coming all the way down again before then going. So you don't want to, either you buy it immediately market opens, or if you miss it when market opens, you want it to come all the way down again to this area before getting that setup. But for me, I'm going to be staying out of Euro CAD totally. The setup is not that too clean. So the scorecard on Euro CAD is, we missed that one, and for that one, I mean, can just paint it red. I won't see it there well. Okay, let me just paint it this brown, and then I'm going to strike it out so that we know that we missed that one outright. Then Euro New Zealand. Euro New Zealand, we said we want to buy it. So Euro New Zealand right here. As a matter of fact, Euro AUD and Euro New Zealand did not really move this week, so to say, as in the last trading week. So I'm going to count 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And this was where we were last week. Right here. We were here last week. So all along, it has actually only respected the buy to some extent. This was what I was expecting back then. And this was what gave me the buy setup, because as we were coming down all the way to this area, the RSI was already giving us a divergence. So we got the buy for just a little amount. We got the buy for how many pips to the upside? About 90 pips, only for price to then start moving in this sideways manner. So we got it right, but it didn't move well as it's supposed to. So my expectation this week is that we are still going to go up, and price is going to be giving us a 5-wave correction. 1, 2, 3, 4. Did I get this count right? This is the X, and this is the 1, 2, 3, 4. Then it's going up for the 5th wave before it may most likely come down. So what I would just advise is to stay out from Euro New Zealand right now. I said you want to buy it up to the 5th wave, but the best one would be to be selling it from this 5th wave all the way downwards. We are having an any diagonal formation, and it will be very good for you to be selling it for the 5th wave instead of trying to buy it from this spot. So I'm going to update that chart right there. I'm going to update that chart right there. Euro New Zealand, we said we want to buy it, and we got it right, but it didn't go that much, but we still got it right. Tire ranging. But our expectation for the week is that we want to sell it for the 5th wave. Sell for the 5th wave. Fifth wave triangle formation. Okay. Euro GDP. What we have agreed on Euro GDP is we want to sell it, or we want to wait for the shoulder pattern first. So let's go to Euro GDP and see what happened so far and see where we are right now. 1, 2, 3, 4, and 5. So this means this was where we were last week. So we put it down here, and then we can clear all this and take it out. So we go to the 4-hour time frame to see what we saw before we say we should wait for the sell. So I told you, if you remember, that I said we should wait for the SHS formation, and that was exactly how it happened. Is this amazing? Quite well. Shoulder pattern. So I told you that don't sell it, just wait for price to go up a little, somewhere around here. Then you can look out for that sell at that point. And that was exactly what happened. Price pulled back a little and flushed down at that point. So we got that one right too. Euro GDP, we got it right. And then for this coming week, we want to continue to sell. For the coming week, we want to continue to sell. But now, what are we supposed to wait for in this particular point in time? We want to wait for the retest of the next line. So as at the time that GDP USD is going up for the final move, and there's a possibility that Euro GDP is going to first come down to this area. Come down to this area right here. So when GDP USD then starts selling, then you may expect that Euro GDP will then reverse it. So I don't think we should wait there's no need to wait for a reversal around that spot, because Euro GDP and GDP USD usually try to do the reverse of each other. So what I feel should happen is that there's a possibility that price will just be dancing all the way around to this area right here. Then by the time GDP USD starts going down, you can expect Euro GDP to make this move right now. So we want to just sell it, and I don't see there's a reason for us to be waiting for that one. Outlook, Euro GDP, just sell it outright. Then GDP card. Do we still have many so that we can finish by 5? GDP card. Let's look at GDP card, and then GDP card right here. So we were 1, 2, 3, 4, 5. We were here last week. So I'm going to put this one, and I'm going to clear that right here. So our expectation for GDP card was that, what do we agree on then? GDP card. We agreed that we should buy it. So we also got this one right too. We agreed that we should buy GDP card, and we were here right there. So let's go to the 4-hour time frame to try to see what we saw then, and then use it to have an understanding of what price is supposed to do right now. So I remember that I said that price have actually been moving in this manner all the way down like this and like this. But that this formation, this harmonic pattern formation is not completed yet. And that is what is just being completed right now. Let's see the pattern that we are having. Let me just switch to the harmonic indicator and see we have one. Okay. So it looks more likely that we are going to be having a crab. Yes, something like a crab. 61.8, then getting all the way to the 127.2 and 161.8 right there. So there's still more to the upside for GDP card. So I'm going to be switching off the harmonic right now. I'm going to normal. This is an old harmonic pattern. Maybe I've not used this stuff for quite some while. So on the 4-hour time frame, let's draw our market structure. We are connecting our lows, and also we are connecting our highs. So what seems to be happening right here is that price is giving us an expanding, either an expanding flat formation or an expanding triangle. That means price coming all the way down here, then making a 3-wave correction, 1, 2, and then 3. The 3 may most likely be breaking this top by some distances of 127.2 to 161.8. I'm going to measure that right here by some distance of 127.2 to 161.8. So that means we may expect price. I think it is best to just expect the crab formation to end around the 127.2 based on the structure that you can see on the daily time frame. So if you are going to be buying the GDP card, you just want to buy it for a little while, just somewhere around here, and it's going to be giving us how many pips right there? About 120 pips also. Then when it gets here, we want to then start looking for a sell structure. The sell structure is because of the crab pattern that is going to be getting completed around that spot right here, something like this. So for GDP card, we are going to be buying it. GDP card, we are going to be buying it, but then we are going to sell it. Buy, then sell at the completion of the crab pattern on 27.2. Our score for the GDP card too, we got it right. The price actually went well in favor, so we mark it to white. GDP check. For pound Swiss, let's go to pound Swiss, and I think that one also went up. I gave you the buy signal too for pound Swiss, and our expectation for the pound Swiss back then that we want to buy it, outright buying. And let's quickly check where we were last week before price actually started going upward. So I'm going to be doing 1, 2, 3, 4, 5, and it means that we were here before the open of new trading week. So this was what will have given you your buy setup right here for you to go long, and that was exactly what happened. And you would have gotten to set your TP based on this extrapolation of the pole flag. This one, extrapolation of the pole flag right here, as you can see. So it's just about getting to that flagpole. So you may expect that price is going to be reversing a little before if you want to continue going upwards. So if you go to the lower time frame, based on our trading guide that I explained to you guys before, be able to see that this area would have given you the inverse shoulder pattern for you to get into the trade. And with the help of the trend line, with the help of this trend line, you'll be able to know what to expect next right now. So what we are going to do is that we are going to do this and then expect that price may most likely be reversing any moment from now. But because it seems as if we still have one last move, price may get here, then go all the way to this top before it then falls. But let's see the overall price action on the 1 hour time frame and see what we expect on the higher time frame. So on the 4 hour time frame, we want to see how far price wants to get to based on the overall structure right there. So the overall structure right here is that we have inverse shoulder pattern based on the overall structure that you can see. And then the formation for that is that price is supposed to extrapolate the edge from the neckline. So it looks more likely that we are going to be getting a reaction around this spot, around this area. We're going to be trying to, so that you get to see it clearly. So we still have some more movement to the upside, but I can see the possibility of price first coming down here before going upward. So based on what we have been able to see right now, we can then go to the 1 hour time frame to look out for the expectation of price action right there. Remember that we drew this trend line as our guide. So it means that if price breaks below this trend line, it's only doing a pullback. So price can actually go all the way to this area, then break the neckline, doing something like this. Break the neckline as a pullback up to this retest of the neckline area, then continue in the journey at which it wants to go through. So for me, I will want price to come back to this area to test the neckline before we can get the buy setup. So I'm going to update the chart right now, GDP chart. GBP Swiss. You want to buy it, but you want to wait for retest. Wait for retest of neckline. And then we got it right. GBP Swiss, we also got that one right too. If I do exam and we don't get A+. GBP New Zealand. We wanted to buy it, but wait for New Zealand when New Zealand is weak. Unfortunately, New Zealand was not weak, and so it means that GBP New Zealand may most likely not go as expected. GBP New Zealand, and we want to press Ctrl Y and then do 1, 2, 3, 4, 5, and we were here as at the time that we had the last webinar. So it went in the favor, but not as I expected it. And the price action that we saw back then was that it was similar to what we saw on the GDP Australian dollar. That means price was giving us an any diagonal structure, and as a matter of fact, if you are able to draw your line on the RSI, you'll be able to see where the buy is actually starting from. That means around the time that price is approaching the 50% level. And if you go to the lower time frame too, you'll be able to see the reversal formation on the lower time frame. I'm going to go to the 15-minute time frame. So the 15-minute time frame, and then we'll be able to see that we have this on the 15-minute time frame. It's not all the time that you're going to be getting to see the shoulder edge shoulder. No, sometimes you're going to just be getting the reversal, the any diagonal structure, or just the diagonal structure, so to say. So this one right here, price was moving all the way down, but what can you see on your RSI? The RSI was showing you clearly that it was moving in this upward. Let me use a straight line. That it was moving in this upward manner. Look at, if you draw your RSI, you'll be able to see the divergence quite well. And then if you draw the second RSI, you can see that there's a break above this level when the RSI was actually completed. When the RSI was actually moving upwards right here. That means around this point where you're having your breakout right here, you can see that it was also reconfirmed on the RSI signal. So if you take that trade, what would have happened is this: if you take that trade around that spot, price may have first taken you out and break even. That means if you take his price goes around 50 pips in your favor, you move your stop loss to break even, only for it to take you out. Now, if that won't happen, all you then need to do is to wait for it to complete a new reversal formation before you will enter the trade again. So which is something like this. Something like this right here. This is the second shoulder. It's a very small second shoulder. You may not be able to see clearly, but a retest of this area and price bouncing up around this area, we're giving you the confirmation, the second confirmation for you to go long. And at that point, that's where you're having your RSI also will be giving you a breakout around this area. You can see it was giving you a breakout around this area. So all along, if you scoop the trade, you'll be able to get roughly around 150 pips profit. So what is our expectation for this week based on what we have seen so far right now? Let's go to back to the 4-hour time frame, and then we can look at the price action that we expect on the 4-hour time frame. I'm going to be drawing this, and I'm going to be drawing this, and it means that we expect that when New Zealand start getting weak, that this is giving us a continuation formation on the lower time frame for us to go long. So go back to the 1-hour time frame. Most likely, you're going to be able to see the flag setup on the 1-hour time frame right here. You can see that we are having something that looks like the flag setup right here, and this is the first impulse. The price is going to be making possibly a 5-wave move, 1, 2, 3, 4, and this will possibly come back to this area before we look for the long setup. So the straight setup for this one is long when price rejects the level. So this level should be when price rejects. Let me just put it around here. When price rejects what's the price level? So I'm going to go to this one, GDP New Zealand. We're going to be going long if price rejects this price level there. But we got it right here too, GDP New Zealand, and we got it right. So what is my score so far? If you like saying A, I just get it. So USD JPY, I told you that I want to be neutral on USD JPY. If you remember, I told you I want to be neutral on USD JPY. So I don't even want to give myself any score on that one. But let's go there. Maybe the structure is now clear. USD JPY 4 hour time frame, and price came down. That means yen was stronger compared to USD, which makes sense. So for this one, I think that I want to look out for an harmonic pattern on this area, and possibly price is going to be getting to the 88.6 based on the bar formation. So price is most likely supposed to get to this area, then give us another sell, maybe giving us this kind of movement around here. So I will be expecting a bar formation, the completion of the bar formation for this set of XA, B, C, and D right here for this setup. If you don't know how to quickly detect this, there is a scanner that does all that. But me, I've gone past the level of using a scanner to be able to see the harmonic pattern. And this is the divergence, and this is the harmonic. Let's see if we have USD JPY. It may not have detected it right now because it has not gotten to that level yet. So it's not going to be here. But during the week, I'm very sure that it's going to give us a signal for the USD JPY bar pattern around here. But based on my trading experience, I can quickly see that price is going for the bar pattern. So we need to zoom in a little to be able to see what our expected price action is, and then we can use that to know what to expect going forward. It's not so clear here. Let me quickly go to my chart on TradingView where I have the weight count. Maybe it's going to be clearer there a little. Okay. So this is what I was saying, that you won't be able to see clearly here. Let's go to the 4 hour time. So this is the formation that I was telling you, or the price may most likely get to this area, then reject it based on this harmonic pattern and go forward. And it's because if you go to the if you go to the higher degree, let me just zoom it a bit too, you'll be able to see that we are in a very big corrective structure. Price came down and is doing all this. And when it gets here, there's a possibility that it's going to go up all the way to this area before then flushing downward. But all the while, USD dollar yen has not been clear, which is why I've not been trading it at all. So my expectation for USD JPY is to buy it at the completion of the bar pattern. So for this one, there's no score since I told you guys that I'll be neutral. And then for going forward, we want to buy it at the completion of the bar pattern. Now, it can be alternate bar pattern. I don't want to keep on explaining most of all these things in details for you guys. But the alternate bar pattern is going to be having the end around the 113. They have almost the same structure. The only difference is the bar pattern usually gets to the 50, and the alternate bar pattern is supposed to reject at the 38.2, which is where this one has rejected and retraced, and we may most likely get to the 113%. So I will be happy if it gets to the 113%. So let me just check it there at the 113. Of the alternate bar pattern 113. Okay. For the AUD USD, we are still looking for the bearish pattern for price to sell, and it only sold a little. Let me just press Ctrl Y and see where we were last week. 1, 2, 3, 4, 5. I think, okay, this is a 4-hour time frame. I was wondering because I know that we were not that far. 1, 2, 3, 4, 5. So this is where we were. And I remember that I was telling you guys that if you wait for the completion of the sharp pattern before we look for a sell entry. Unfortunately, again, dollar index was not strong yet, which is why you see that the Australian US dollar is not selling yet. So I drew this and I set the 113.1%. That we need to wait for price to get to that level, then we look for sell. And that was exactly where price got to, and then it started selling. But it has not really sold well. It only sold a little, then come back, and it's giving us, it's most likely just ranging. But this formation can be seen to be like a double top formation, and then price only doing a small retracement so that it can continue going down. So we still got this one right too, and we are going to still be getting it right going forward. Can remember I said bearish, wait for the sharp pattern completion, and price exactly sold around exactly at the 113.1% extension. So for this, we also want to continue bearish. We want to continue bearish. Continue bearish on this one. AJ, the same thing. If you go back here, you'll be able to see that AJ also, we said that we should wait for, we drew this, and we drew this, and then we said we should wait for price to reject that level and sell. Well, we were last week, 1, 2, 3, 4, 5, so we're somewhere around here. So I was telling you to wait for somewhere around here to look out for the sell. So this was where we were, and then we can go back to the 4-hour time frame and see the price action that we had right there, which is the sharp pattern around the 113.1%. You get to see that very well on the 4-hour time frame, and then we'll look at what happened eventually. So I'm setting this one to the 113. Okay, this one was not the sharp pattern. It was more like a price action setup that I gave you guys back then. This one is not sharp. It didn't break the low. But all along, I told you guys that you should be looking out for a sell, and that is what has happened. But it has not really moved far. It has only moved around maybe 70 something pips. So it's just about getting to 5 right now. So I'm going to be ending this webinar very soon. We want to continue bearish. Oh wait, I've not been bullish. Then sell USD USD card. What did we agree on USD card? Bullish. Australian US dollar. I'm supposed to paint this one red, and also this one red. Please try to go through if there's any other one that's supposed to be red that are painted green. So we want to continue our bearish on AUD JPY. Continue bearish, and then the score here too is a confirmed pass. Then New Zealand USD, check JPY, CAD JPY. We will still have time to go through all this. Let's just quickly see for New Zealand US dollar. Let's quickly see. Control Y, 1 hour. Then let's see where we were before I said by 1, 2, 3, 4, 5. This was where we were. So I said you guys should look for a buy around there, which is exactly what happened. Then we are then going to be looking for our sell setup. So we got our buy, and then we are going to be looking for our sell right now. we got our buy around here for how many pips from the last point? Just about 60 pips. So there's a possibility that price is going to have taken you out at break-even if you took that buy setup. But the overall structure that we can see on the 4-hour time frame is that price is in wave 4 and is most likely supposed to end around, which was what I told you guys eventually, that is most likely supposed to end around the 127.2 to 121.8 for wave 5 before the proper sell. And there's a possibility that price is going to first come down before it goes up. So this is not a clean trade, but we are still going to be looking for a sell on New Zealand. Then we are going to be buying it around that spot. So let me quickly update that. New Zealand will be selling it, then buy for long term. So the buy for long term, I'm going to be following that green. Now, what score should I give myself for this New Zealand? Because it didn't really go that much. I think I'll just go neutral. It didn't really go that much in the expectation. So let's just make it neutral. Swiss yen and then CAD yen. We said we want to sell and wait for the retest of the top. And let's quickly check what happened there. Swiss yen, which is this one, and Control Y. We're going to do 1, 2, 3, 4, 5. That means we were here when we had the last. So it went exactly as given. So if you go back to the 4-hour time frame, I told you guys that we want to be looking for sell, but we want to wait for price to come and retest the top. That means we want to wait for price to break out of this structure. I remember drawing out this structure, and I want to wait for price to be selling somewhere around here, and that was exactly what happened. This was where we were last week. I drew this line and I drew this line, and I said there's a possibility that price is going to go for one more up move before then selling from there. So let me quickly update that too. This was also passed, and then our expectation right now is that we want to continue selling. Let's see if we are supposed to continue selling it or wait for a correct structure. Okay, we're going to be, since it has started pulling back, we are going to be waiting for price to come back all the way to this area before we sell it. So you don't want to sell it yet. Even though price starts going like this, it may most likely come back again. So you want to wait for it to come back first before you then look for a sell setup. So for this week, we want to continue the sell, but wait for the completion, wait for a continuation pattern to form. Okay, CAD JPY, most likely the same thing is what we may have seen the CAD JPY right here, and Control Y, 1, 2, 3, 4, 5, we were here, and then we agreed that we are supposed to wait for the retest of the top before then selling it. So this was the top. This was the top right there. So I told you guys, wait for the retest of that top, then you can look for the sell setup, and that was exactly what happened. Price actually sold off after retesting it and gave roughly around 110 pips. So what is our expectation going forward on this? Let's go to the 4-hour time frame, and it seems as if we are in a corrective structure right here. We're in a corrective structure, and there's a possibility that price is going to be going for a 5th wave. After getting here, we most likely come all the way before it then flush. But it can do a 3-wave correction. That means 1, 2, 3, and then flush down. Or you can do a 5-wave correction. 4, 3, 4, then 5 before it then comes down. So what we can just pray is that it comes, if you are not in the trade yet, that it gets to this area and come back for the 5th wave before it then sells. But the overall trade setup is a sell. So let me quickly update that. We got it right too, CAD, yen, and then our expectation going forward is also a sell. It's also a sell. I think it's an outright sell. Let's just leave it as an outright sell. Then gold. We are going to look at gold and BTC USD. Gold and BTC USD. So for gold, it's very easy for us to be able to see what gold has done. Let's quickly go to gold and see. So for gold, we are going to be expecting one more move to the upside. Now, my score sheet for gold was a buy and I got it right too. Gold was a buy and I got it right. And the reason for this preset of back then was that we were expecting that price would drop and then go upward. I even gave the signal in the TradingView, and that was exactly what happened. Now on Friday, I was able to take small pick from this when I drilled this and I drilled it. So immediately it came down here and gave me this consolidation zone. I took a sell that only lasted here and closed it. So what do we expect going forward? If price wants to go down, then it may most likely just come for the retest of this area and then flush. So if you want to sell, you want to sell it around this spot. Otherwise, if price wants to have one more move to the up before flushing down, then you want to be looking at this as a possible last wave move. That means price is going to go up here, then sell up to this point, go up before it then start selling from that spot. So how do you trade it? You need to wait for price to come all the way to this area, and then you look for your sell. Immediately you get here, you want to put your stop loss to break even, so that when you want to go out of that position, you want to go out for the final move, it's going to take you out at break even. Then you want to wait for it to break this stuff very well, and then look for your sell entry. So for me, we are going to be selling, but we are going to wait for the final move. So for gold, we want to sell it. But wait for pullback or break of stop. BTC USD, that's Bitcoin, which is going to be our final for today. Then I can address any question. BTC USD, I was telling you guys to be looking for sell. Let's go to 1 hour time frame and then check 1, 2, 3, 4, 5. So this was where we were right there, and I was telling you guys that we should look for sell. But this was what happened during the week. Price made this push to the upside. So we got the Bitcoin wrong, and let's look at what has happened. Why did we get it wrong? Well, price broke out from this structure eventually. It broke out from this structure. And let's go to the 4 hour time frame to see what happened. So it's only making a final push to the upside before we can then look out for a sell. So I think what is happening right here is that price wants to possibly make a push to this area, giving us the length of this, a 3-wave correction, then after that coming all the way down to this point. So for me right now, I would just advise that for Bitcoin, you don't want to buy it yet. You want to wait for price to get to this area and then look for a sell. Then when it gets to this area, that's when we determine whether it wants to keep on going long or it wants to test the low before going long. So for me on Bitcoin, I'll be neutral. For Bitcoin, I'll be neutral. But if you are going to be looking for the sell setup, then you want to wait for price to get to this area and then reverse, where this one is going to be forming the neckline and shoulder pattern to flush downward. But this is in a middle point. It's in a middle point where it can go up and then come down, or it can just come here and then come down. So I'm going to be neutral on Bitcoin. On Bitcoin, I'll just Okay, for Bitcoin, we didn't get it right, so I'm going to be coloring this, maybe the brown right here. And then our expectation for the coming week. Oh, that is good. This one is good. We got the gold right. We got the gold right. But Bitcoin going forward, we want to just remain neutral. So I'm just going to pay this on black. Sorry. I'm just going to pay this one white. Okay. USD. So do we have any questions? I think we are good right now. We've been able to do a whole lot of analysis that will take us all through the week and even beyond. Do you have any questions? So like I said, going forward right now, I'm just going to be recording and then putting it on the on YouTube, where you can just go and watch. And after watching, please try to share. Just click on it. For instance, if you click on this and when you finish watching, all you need to do is just click on like. You just click on like and then you click on share. Once you click on share, you're going to bring this, and you can copy it and go to your Facebook and just put it there for some other traders that are not already with us. So, any questions? Any questions so far? If there are questions, you can just ask me in the group. And this is already 10 minutes past 5. It's supposed to be a 2-hour webinar. So we end the webinar right now. And if you have any questions, chat me up within the group. If you want to subscribe to the academy, you just go there, click on become a student and register. Then log in to access videos. So you guys enjoy the rest of the weekend, and wishing you guys a very peaceful trading week. Now, regards to your family, and happy trading.